Welcome to the Deep Dive. We take your stack of sources, all that research and those notes you've pulled together, and we try to boil it down to what really matters. Today, we're tackling something really interesting you flagged. This massive, kind of unexpected shift happening right now in the U.S. I mean, for ages, the story's been pretty straightforward, right? Everyone's heading south, sunshine, lower taxes, you know the drill. But what if that whole narrative is, well, changing fast, like really changing, getting flipped completely on its head in some ways? We're talking about states maybe people didn't think about as much, especially Northeast, Midwest. They're suddenly seeing huge demand, tight housing markets, while there's popular southern states, they're actually seeing things go the other way significantly.
It is a profound shift, isn't it? And what's really fascinating, I think, is just how quickly this is happening. The standard thinking, the conventional wisdom, it's being challenged by data. It's revealing this turnaround that honestly it affects everything. Housing prices, sure, but also regional economies, the works. This isn't just noise. It's not a blip. It really makes you ask, okay, what is truly driving this reverse migration? And what's it mean going forward? So our mission today really is to unpack that, look at the data, the different reasons behind this new structural thing happening. We want to give you a fresh look at how the U.S. housing market and where people are moving is evolving. We'll dig into the specifics and show how those old assumptions are just getting turned upside down right now.
Exactly. That's the core of it. And to really get how dramatic this is, you got to look at the numbers, the hard data. It tells a story that, frankly, might surprise you. I mean, what we're hearing from the ground, especially in places like, say, upstate New York, quieter towns, maybe Valatia in Columbia County, intense bidding wars. And it's not just one town. It points to a real surge, a real migration to states like New York, Massachusetts, Connecticut, New Jersey.
And the inventory numbers really highlight how fast things flip. Just look at this. Florida, right now, has over double the homes for sale compared to the entire Northeast. Florida's sitting on, 182,000 properties listed.
Wow.
Now compare that to the whole Northeast U.S. combined. That's 9 states. They only have about 85,000 homes for sale total.
That's a huge difference.
The scarcity up there is really, really striking.
Yeah, staggering is the word. And prices, they reflect this completely. We're now seeing home prices actually dropping in states that were just boiling hot not long ago. Florida, Texas, Arizona, which is the total opposite of those tightening markets we just mentioned, Northeast, Midwest. Demand there is pushing prices up sometimes, like really sharply.
And this marks a huge reversal from that pandemic migration boom south, right? Remember 2022, that was the peak. Roughly 900,000 Americans moved south.
Yeah, huge numbers then.
Fast forward to now, 2024. That number, it's dropped significantly, less than 500,000. And the forecasts suggest it could go even lower for 2025, like maybe some of the lowest levels we've seen in decades.
Wow.
We're talking maybe 500,000 fewer people heading to the Sun Belt compared to just 2 years back.
And you see the impact right down at the street level. That town, Valatia, New York. Before the pandemic, homes there might sit for, 90 days on average.
Standard enough.
Today, that's plunged to just 19 days. 19. That's not just things speeding up. It's like breakneck speed. It tells you everything about the demand.
And here's something really unexpected. Serious housing shortages popping up where you least maybe think. Albany, New York, the state capital. It now has the distinction, apparently, of having the biggest housing shortage among U.S. metro areas, over 300,000 people.
Albany. Really?
Yeah. Its inventory is down something like 50% from its long-term average. 50%. Think about that. A state capital in the Northeast. Tighter housing crunch than many of those, booming southern cities people talked about.
That is fascinating when you frame it like that. And meanwhile, you look down south, Florida. Cities like Lakeland, Ocala, Tampa, their housing inventory's up, like 80 to 100% above normal levels.
Huge difference.
And this situation, okay, may be good if you're a buyer down there, but it's really uncomfortable, let's say, for a lot of people in Florida. And here's why. About 25% of Florida's whole GDP comes directly from residential real estate.
A quarter of the economy. That's huge.
It's not just some abstract number, right? It means for every $4 generated in Florida, one comes straight from building houses, buying them, selling them.
Right.
So when that market slows down or declines, it sends ripples, like directly through jobs, small businesses, local government money. It's incredibly disruptive for a massive chunk of the population whose whole livelihood kind of depends on that housing market staying hot.
Yeah.
So accepting a declining market, that's a really tough pill to swallow when it hits your neighbor's job or maybe your own.
Okay, so if the data is that stark and these economic impacts are hitting like that, what's actually driving this reverse migration?
Yeah.
It feels like more than just, a temporary correction after the pandemic.
That really is the key question, isn't it? My feeling is it's not just one thing. There are several powerful forces kind of converging here. Where should we even start trying to unravel this?
Well, I think the most immediate, the most obvious factor is how the money side has just fundamentally changed. Specifically, affordability. The whole dynamic has shifted dramatically. Think back just 5 years. Southern states.
Hmm.
Genuinely affordable. It was common knowledge.
Oh, yeah, definitely.
You could sell a house in, say, upstate New York, maybe like that Valatia place, and potentially buy, I don't know, 2 or 3 places in Florida or Tennessee with the cash.
Right.
But now, that math is totally flipped. We're hearing people selling houses in New York find they can't afford the kind of house they want in Tennessee or Florida. It completely contradicts that whole story of Southern affordability that drove things for so long. The cost of living, especially housing, is just caught up. That key financial reason, gone for many.
So that economic magnet pulling people south has basically, well, lost a lot of its pull. Okay, what else is feeding into this big U-turn in where people are going?
Something else that's becoming, I think, a bigger and bigger factor is climate change. Now, I know it can be a controversial topic for some, but the reality is southern states, western states, Florida, Arizona, parts of California, they are facing increasing exposure to, well, serious climate issues, natural
I
disasters.
guess hear more about it.
And we're seeing a clear trend now. Some residents are actively looking to the Northeast and Midwest as kind of safe havens from worsening conditions. We've seen specific examples where people moving to upstate New York, from California, from Florida, and they explicitly say they research areas less vulnerable to climate impacts, wildfires, extreme heat, sea level rise. It's becoming a calculated move for a growing number of people.
And that ties into a demographic shift we're seeing, too. It seems observationally that people who maybe identify as more liberal, who often rank climate change as a higher priority, they're noticeably among those moving northeast and Midwest.
Interesting observation.
Now, this isn't just about dodging a hurricane anymore. It's becoming a migration partly driven by shared values, maybe creating more politically similar areas. This isn't a judgment call on why people move, obviously, but it's an interesting observation on how these moves could, over time, change the political feel of both the places people leave and the places they go.
Right.
It could deepen some of those cultural divides we already see in ways maybe we haven't fully thought through yet.
And that also kind of connects to this other broader thing, the moving back home idea.
Yeah.
Beyond just money or climate, we're seeing this trend where people they want to go back to their roots, familiar areas.
Yeah, for that too.
Even if those places maybe don't perfectly match their politics or, yeah, they have colder winters. It's funny, a few years back, felt like everyone I knew was talking about moving to Florida or Austin. Now, that conversation's totally flipped. I hear way more stories about people heading back north saying things like, I actually miss having 4 seasons, or frankly, I miss being able to afford a decent house.
Oh, right.
Seems like there's a bit of a slowdown in that idea that just moving to the fastest growing southern city is automatically the best life choice. People are maybe looking for something a little different now, something more, I don't know, grounded.
It really does make you rethink all those assumptions we kind of took for granted for so long, doesn't it? And look, this isn't just about what's happening now. There's potentially a huge legislative thing looming that could pour gasoline on this whole trend. A major policy catalyst. The state and local tax deduction.
SALT.
Right,
the SALT deduction. To really get why this matters so much, maybe a quick history refresher.
Yeah, good idea.
So historically, you could pretty much deduct your property taxes from your federal income taxes. Paid $20 in property tax. Your taxable income went down by $20. See, simple. But then 2017, the Trump tax bill, it capped that deduction at $10,000 per household.
Yeah.
And that hit homeowners hard in high property tax states. Think New York, Illinois, New Jersey. Places where property taxes can easily blow past 10 grand. You might have $1 million house in NY with $25,000 in property taxes, or even say a $700 house in the Chicago suburbs with $16,000 in taxes.
Easy.
Before the cap, they wrote off the whole amount. After, only $10. So it effectively made living there more expensive overnight for a lot of people.
Okay, and this is where it gets potentially really game-changing. There's a proposal now, part of what some are calling a big, beautiful bill, to raise that SALT cap way up, all the way to $40,000. How would that change the math for homeowners in those states?
Oh, it would be huge. Dramatic financial implications. A $40,000 cap. That would mean most homeowners in high-tax states, New York, Illinois, even Texas, which also has pretty high property taxes, could deduct pretty much their entire property tax bill again from their federal income.
Wow.
For people in wealthier areas, this could literally make owning their home, like the ongoing cost, up to 30% cheaper year after year. And think beyond just saving money for individuals. This
Yeah.
could fundamentally change the tax base, maybe even the political dynamics in those states.
How so?
Well, it potentially creates this new kind of economic split between people who can really benefit from these big deductions and those who can't. Could reshape local economies, state budgets, in ways we might not expect.
And just think about the market acceleration. If that proposal actually passes, it creates an even bigger financial reason to buy in those high-tax states in the Northeast and Midwest. It would just add more fuel to the fire, that housing boom we're already seeing there.
Absolutely.
And of course, there's politics involved. Some members of Congress, say from New York, have reportedly said they just won't vote for the larger bill unless this SALT cap increases in it.
Right.
Just shows you how much weight this one tax rule carries.
So you put all these pieces together, right? The affordability shift, the climate worries, people wanting to go back home, plus this potential SALT deduction change. It all points towards some pretty clear, broader regional economic consequences.
That forecast angle is definitely striking.
Yeah.
What are the projections saying about how these regions might perform, say, over the next few years?
Well, the general expectation now, based on these trends, is that the Northeast and the Midwest, they're likely going to see outperformance, both in housing price appreciation and just overall economic growth for the next 5 years or so.
Performance, okay.
And conversely, the prediction for the southern states, the Mountain West, is likely a slowdown, a decline in that crazy price appreciation we saw, and probably slower economic growth compared to the North. It really feels like a rebalancing act is underway, a significant one.
And maybe to put this into perspective, think about Chicago and Illinois. They're kind of a good parallel here, right?
Yeah, definitely.
They share a lot with New York. High property taxes, check. Can be pretty substantial. Colder climate,
Yeah.
check. They also saw a lot of people leave during the pandemic exodus.
Uh-huh.
But now,
Uh-huh.
Chicago is seeing very tight housing, bidding wars again. Suburbs like Lake County, DuPage County, they're looking at a 50% inventory deficit. 50%.
And what's really amazing about all this data, when you step back, is how much it just defies what everyone expected. Seriously, if you told someone, I don't know, 3 or 4 years ago, hey, Chicago is going to have bidding wars while Florida's housing market is, quote, crashing,
They'd think you were nuts.
totally. They would have told you were completely mistaken. But that's exactly what we're seeing play out right now. It just cements the idea that this isn't some small fluctuation. A really significant, unexpected structural shift is happening. It's quite a remarkable reversal of fortunes, really.
So wrapping this up, what does all this mean for you listening out there? And just for the shape of the U.S. going forward? It seems clear that the old story, the conventional narrative about American migration has been decisively flipped. We're seeing this really powerful structural trend now of people moving back to the Northeast and Midwest, driven by this whole mix of factors we talked about.
Yeah, and those main drivers seem pretty clear now, right? That dramatic shift in where it's actually affordable to live, the increasing role climate worries are playing in people's decisions, and then the potentially huge impact of policy, like that SALT deduction change possibly coming down the pike. These aren't just temporary blips, you know? They seem to be carving out a new reality for where people want to be.
Which leaves us and you with a really important question to think about. What does this reverse migration really mean for the long-term desirability?
Yeah.
The economic future of different parts of the U.S.?
And how might these shifts, these demographic changes, these economic pressures, how might they reshape everything from city planning to building infrastructure, even just the feeling, the identity of communities across the country in the coming decades? It's prompting, I think, a fundamental rethink of what actually makes a place desirable in America today.